Hi, welcome to July 19th, 2024 trade recap for today. Um, I'm gonna be covering my one trade today. I did take it on stream and it was a losing trade. I'll go over why. Well, it was it was a good entrance or enter. My entry was a good entry. It's just I had my stop loss um, set to a wrong, like it shouldn't have been there, and my bias was overall correct, but like I said, my stop loss was placed in the wrong place. Let's get right into the charts actually here. So I do want to go over the economic calendar first. So for today, I noted that we didn't have much news. We didn't have any red folder news coming in today. So I wasn't anticipating too much volatility, but here are the charts when we actually came when we opened up on Friday. So I was anticipating for us to either consolidate here if we didn't respect this fair value gap. So I was anticipating either like consolidation or a retracement back inside this daily FEG right here. This is the daily FEG that I'm talking about. This one. That's the daily FEG, but it was either we retrace back inside this daily FEG if we disrespected this 4-hour FEG here. So notice how we didn't disrespect the 4-hour FEG, and we actually showed signs of respect to it. So here on the hourly time frame, you can see it even clearer. We had a 6-hour FEG as well, a 8-hour FEG, and a 10-hour. Well, you can't really see it from this point of view, but here you can see the 10-hour FEG. We trade into that during the open, and like I said, we showed respects to it, and that means we won't be retracing back inside that daily FEG that I was talking about. So I actually typed that out during the market outlook on my Discord channel. So I said that that daily FEG is something that I would note out coming to tomorrow and next week. For tomorrow's price action, I am anticipating for us to take out previous day low if we can respect the 4-hour FEG. So this is that 4-hour FEG, and we did target previous day low. And if we didn't respect the 4-hour FEG and we closed above it, then I can anticipate a retracement back into the daily FEG. So like I said before, that daily FEG was going to be the draw if we disrespected the 4-hour, 6-hour, 8-hour, and 10-hour FEG. I say all of those time frames, but it's because, like I said, it's basically the same fair value gap here. And I also kept in mind that tomorrow or today was Friday, so I wanted to trade with caution. And number one goal in trading is capital preservation. There's this streamer Tanya Trades. If you guys heard of her, I think her quote is something like "Capital Preservation Friday" or something like that. It's really, it just means that you should trade safely and just preserve the capital that you made, or prevent any more losing trades from this week. So here is the trade that I actually took today. So like I said, if we respected the 4-hour FEG here, like I said, we would be seeing previous day low get taken. So we actually retraced back inside this daily this 4-hour FEG during London session, and we had a really strong move down to take out previous day low. And after taking out previous day low, we actually had a pretty deep retracement back into it again, into the 4-hour FEG. And if you watch the live, I actually was anticipating for us to take out London highs here, but we didn't actually end up taking London highs, and there was no setup to target London highs. So whenever we reprice down again, we had this 15-minute fair value gap, and this is actually the trade that I took. It was based on this 15-minute fair value gap and how we reacted to it. So notice how prices taps inside this 15-minute fair value gap, right? Once, and we do it once, like another one, once more with this next candle. So at the time, this was a fully green candle, and it was all the way up here. So, but whenever we closed, like I said, based on the on stream, I noted it out too. So you always want to wait for the candle closures, which is why whenever this was a fully green candle, I told myself that I was gonna wait to see if we can close above this 15-minute fair value gap, because if we disrespected this 15-minute fair value gap, that means we are going to be pricing higher, and we're not respecting bearish PD arrays. But whenever we close on this 15-minute candle here, we showed respect to the 15-minute fair value gap, and we had a bearish power of 3. So what I mean by bearish power of 3 is, what can we anticipate with this 15-minute candle right here? This one right here. We can anticipate for this candle's low to be taken, correct? This 15-minute candle. So this 15-minute candle lows becomes a draw of liquidity, and this low as well. This hourly low here. So that hourly low, this is an hourly candlestick right here, and that hourly low becomes the draw of liquidity and London lows. And if we do get further displacement down, or then we can be attacking June 24th low as well. So based on that 15-minute power of 3, correct, I want to go on to the lower time frames to see if there's any supporting ideas that would tell me, hey, like, we're gonna go continue lower if we retrace back inside this FVG. So there's a 5-minute FVG here that prices could retrace back inside and then take out the 15-minute low, and even end up taking London lows as well. So London lows was my full terminus for this trade, and I don't take my entry based off the 5-minute. I actually based it off of the 3-minute because it's a clear fair value gap, and this was what my entry looked like here. So my target here was actually the 1 hour low, and my stop loss was that 3-minute FEG's high. So I was anticipating for this 3-minute FEG to be a breakaway gap, and so I was anticipating for prices to open, tap inside this 3-minute FEG and continue lower. So I had my stop loss set at this 3-minute FEG high and treat this other 3-minute FEG here as a breakaway gap. And breakaway gaps, basically that means you anticipate for prices not to retrace back inside it. So what ends up happening is actually let me leave the trade on actually. So what actually happens was we trade up into my stop loss by like 0.5 of basically half a point, and then we end up taking out our targets. London lows, this 1 hour low here, so let me mark that out as the 1 hour low. That's the 1 hour low. London low gets taken, and London low would have been my full terminus. I wouldn't have anticipated for us to take out June 24th low as well. I was thinking that we were probably going to leave this low for next week's price action, but turns out we're pretty bearish and we took it out as well. So the thing I could have done a little bit better this trade, or how can I word this? The thing I could have done a little bit better here was not actually frame my entry based off, or not frame my trade off of the 3-minute FEG, but actually the 4-minute. Because if you look at the 4-minute, it's actually a clearer fair value gap here. Look at this 4-minute fair value gap. It's a lot clearer, and let me just get rid of this 15-minute fair value gap because we don't need that anymore. Look at this 4-minute fair value gap. It's a lot larger in size. That means you should be basing it off of the 4-minute time frame. It's just clearer, and the entry should have looked something like this. I should have like my entry could have been within this 4-minute FEG, and to at least have it a 1-to-1 risk to reward. And if I had done it like this, to where I frame it on a higher time frame relative to the 3-minute, so you know my entries are always sub 5-minute time frame, so it could either be a 5-minute fair value gap, 4-minute, 3-minute, 2-minute, or 1-minute. But there should have been no reason for me to base my trade entry off of the 3-minute whenever there is a 4-minute, and the 4-minute is higher time frame compared to the 3. I mean, it's only 1 minute, but you know, it's relative. Like, if you're being, you know, analytical here, like 4 is bigger than 3, and higher time frame holds higher power. So I should have based my trade off of the 4-minute. This is something that I'm going to change for my strategy. Is I'm not going to be basing my trades off, like if I were to choose either a 3-minute FEG or a 4-minute, and both are present, I would choose the 4-minute entry, or I would structure my trade based off of the 4-minute instead of the 3-minute. And yeah, and you can even see on this 1-minute time frame as well how prices taps inside that 4-minute FEG here, and we continue lower. The thing is, this actually, like, a little bit unfortunate how I actually got stopped out by half a point. That's kind of tragic, but like I said, lesson learned. One thing I do want to know is how we repriced actually above the 11 o'clock open. We repriced above it, and we displaced lower. That's something that you want to note, because you always want to be selling above like an opening price, like, and every single hour there's an opening price. At the 11 o'clock hour there's an opening price, and we sold above it. Same concept as the midnight open, but just applied to the hourly time frame. And yeah, that's gonna be all for the recap today. It's a learning trade. Like I actually I learned a lot from this trade. I noticed that we repriced above the 11 o'clock open. I should have based my trade off of the 4-minute instead of the 3-minute. And yeah, I've been getting a lot of comments about, not a lot of comments, but I did get a comment about these higher time frame candles here. That's beside my that's beside the actual original time frame. So this time frame that I'm on right now, every single candle that you see right here are 15-minute candles, but these other candles right here next to the right of it, these are basically the same. It's like it's just an indicator. But someone asked me, like, why do you have this on here? I have it on here just so I can see what the higher time frame is, what's happening on the higher time frame. It just allows me more it allows me to have a larger perspective, and I won't be too tunneled. I used to be really, when I first started trading, I strictly was on the 1-minute, and I was just trading based on 1-minute structure. But whenever I got introduced to this indicator, you know, it allowed for me to have like not a larger perspective, but it allowed me to have a clearer perspective of what's actually happening on every single time frame. And whenever you have time frames that align with each other, like here on the 4-hour time frame, like I said, we're attacking these lows here, but I was anticipating these lows to be taken next week, but anything could happen in the markets. And like I said, the trade that I took today was actually based on the higher time frames as well, because the higher time frame were bearish. And if I can take a lower time frame bearish trade, that means I'm aligning myself with the higher time frame. And these candles here on the right, these indicators, it just helps me a lot with staying in line with the higher time frame. I know it might look like overwhelming, confusing, but it just helps for me. But yeah, I think with that's gonna be all for my video today. I'll be live on Monday as well, 8:20 a.m. Central Time. So you guys make sure to check that out. But yeah, with that, that's gonna be all for my video today, and thank you guys for watching, and I'll see you guys next time. Peace out. Bam.